Thanks, future Andy. Hello, so Matt, introduce yourself.
Yeah, hello, present Andy. I'm Matt Furno. If you haven't seen me before, I'm commercial director at GBG Locate. So GBG is a technology company operating across location, identity and fraud. And I work in our location technology side of the business. Typically, you might see Locate at a checkout, making it super easy for your customers to capture their address. We do other stuff as well, but I'll leave it there.
Interestingly, I'll actually be past Andy by tomorrow. Get your head around that. Bobby.
I hope not, Andy. But anyway, hi everyone. My name's Bobby Tulis. I'm Group Marketing Director for GFS. In case you don't know us, GFS were set up in the UK more than 20 years ago as the industry's first provider of managed multi-carrier services and technology. And today we are still here and we're the largest.
Okay, magic. So we are, we're recording this on Wednesday, but we're in the biggest week. So I don't know to what extent, you can turn information around pretty quickly. But what are you seeing so far, the most up-to-date stuff that you've seen on your platform? Is it what you expected? Is there any new trends? Is it in line with expectation, etc.? Matt?
Yeah, so given where we sit, so Locate has about 15,000 customers around the world, of which probably 2/3 are in the UK, and about half those are retailers. So big and small and everything in between. So if we just think about address capture at the point of checkout, and we're able to see the throughput of that, we would expect to be seeing quite a lot more by now, I think is where I would say on the Wednesday before Black Friday. Just one data point, although I can't share the brand, one particular sports fashion brand that had its sale start last Friday, we would expect to see a significant increase over normal, and we did, and transactions went up about double over what we would see day by day for that particular brand, but that was about 50% lower than what we saw on the launch date last year. So it's an anecdote, but it's a brand that's doing well. So double volume, but 50% down on last year. And I would say the September into October, into November, everything is just, it's a bit spiky in places that we weren't necessarily expecting, but everything is a little bit below where we would expect it to be. And I think although there is now a bit of a subtle build coming through the course of this week, it's sort of 1.2 times what we'd expect to see, not 1.5 or higher. So we'll see where we get to by Friday, but I think that's probably consistent with that general sense of a bit of softening in demand. Although so many of the brands have gone absolutely nuts this week, and my Gmail inbox is just overflowing. Everything from Heathrow parking, how is that a Black Friday thing, through to every possible thing I've ever interacted with. They're all just chucking Black Friday deals at me now. So it's all kicked off.
Yeah. Okay, Bobby, give us your perspective, and then I'll chuck in some of my own pennies.
Sure. Well, we're looking at it from the perspective of parcel volumes. So we've seen campaigns start early this year. So this is looking at our own GFS proprietary data across over 400 retailers that we manage parcels for. So campaigns have gone early this, started early this time. And we're seeing that impacting parcel volumes. So last week we saw, compared to the previous week, we saw weekday parcel volumes up by 10% compared to the previous week across all our retailers. If we then look at parcel volumes over the weekend, that's up by 20% compared with the weekend previous. So yeah, we're seeing parcel volumes grow. Compared to last year, we're slightly tracking behind forecast. So it's consistent with what you're reporting, Andy. The only difference we're seeing is that the biggest growth in parcel volumes from our side, at least, is coming through from fashion. That's the main category that seems to be growing the fastest so far. But, it's still early days. Let's see what happens.
Yeah, I think this is one where you're going to have to get all the information together and then say, what the hell just happened. So we are, they have gone very early. We have seen a little bit, like you're saying, Matt, a few little spikes of activity, but I do wonder whether we're sort of the back end of the month, when particularly back end of this week, when you expect to see the biggest stuff all over that weekend. I wonder how much of that has actually been pulled forward a little bit. And to be honest, it hasn't led to spectacular growth. Right, so that's kind of our perspective on it. What are your clients actually saying to you though, about their expectations for it, etc.?
Yeah,
Matt, do you want to kick us off?
Yeah, okay. I think the lead into the peak, we've talked about this in previous weeks. There's been, obviously a hope that things are not going to be as dire as they might be. But I think in the brands that have got good contact with their customers are able to predict activity perhaps a little bit more than some others have been a little bit more confident. Some of our US bigger brands are remaining very confident actually for the weekend as they look to us to ensure we've got all of our kind of platforms scaled up and ready for their traffic. We're seeing some quite high levels of confidence in some of the US, particularly sporting and fashion brands, consistent with what we said a minute ago. But I think the general consensus of all the different brands that I've been speaking to is they're prepping, they're ready, and they're not entirely sure what's going to happen next. And anything which is better than probably their worst fears is going to be a reasonable result if they've got the ability to cope with that downshift. I suspect there's been quite a bit of inventory management, so they're not sat on too much stuff too close to the end of the peak. But equally, I think there's a recognition that if things are left too late, then just managing getting that inventory out to their customers is going to cause them a different set of problems sort of coming into Bobby's world. So I think there's probably been a range of opinions, none of them desperately positive, with some exceptions, but we're all in it now. And I think therefore the next big sort of opportunity is to reflect on what happens over the next 7 days.
Yeah.
Yeah. Okay. Bobby, go on.
Well, I think what the consensus we get when we're talking not only to our retailers, but also to our carrier partners is that the peak is going to come very late this year, right? We're going to have a very late peak in that shoppers are going to hold out until, say, the last week before Christmas, before they do all their shopping. So that's what we're sort of bracing ourselves for. It's too early to tell. Numbers at this point are looking soft, but they could still pick up. Let's see what happens over this week into Cyber Monday. But typically what you'd expect is that week on week after Cyber Monday, the numbers just keep building up and getting higher until they start tailing off just before Christmas. That's not what the pattern we're expecting to see this year. Like I said, the expectation is that if it's going to come, it's going to come late.
Very problematic, isn't it? Because Royal Mail today, Wednesday, have said, they are flooding. So all that stuff is happening. So that's going to cause a real problem with people getting their orders. If you leave it late, that's a big problem. I would suggest. That's where we are. Are there any kind of like specific things that they've raised as like issues, challenges, and stuff that they've said this is definitely, we think, a sort of major thing that we're really concerned about?
Mm-hmm.
I think that the lateness, to Bobby's point, we picked up on as being a lot of concern because the later it gets, the more it's going to be problematic in some cases to get that inventory out before the holidays. I don't think that's going to be the case in all sectors, but that's certainly a kind of sentiment that we've picked up on. And potentially the reverse is true. Some of our customers who have been perhaps a little bit more cautious about what they were going to have in inventory leading up to or through the peak, if they're starting to see slightly greater signs of activity, they're getting a little bit anxious now about whether they've got the stock and they're going to be able to get that to their customers in time. So I think there's just been this extended period of anxiety where, as we've talked about week in, week out on discussions like this, sort of each week comes with its own set of terrible news, and it's going to impact some more than others, but it's probably led to just an aggregate set of just relatively sort of negative trading sort of impact conditions. Yeah. So I think, in summary, as we've said previously, I think the customers that I talk to most regularly weren't expecting it to be brilliant. It probably isn't brilliant, and therefore they're thinking now about how they come out of this period into the new year, try and make the best of the sales, and then start to think again for what comes next, and deal with the headwinds as they are.
Okay, Bobby, give us your perspective, and then we'll get into that 2023 thing.
I think you talked about challenges. So what are the challenges that retailers are talking about? I think there's several, mainly I'm looking at it from the operational perspective. So there's many factors playing this year that's going to disrupt delivery, apart, the obvious one being strikes, right, from Royal Mail. So what we've seen so far is that retailers that have rely on Royal Mail for their deliveries, they're going to have a very, tough time, especially through Black Friday, when Royal Mail are going to be on strike on Black Friday, and today on Thursday. But even once services resume, then even into Cyber Monday, there's going to be severe disruptions and potential delays in getting parcels to where they need to be, because they're still going to have the backlog of parcels to clear through on the days they weren't delivering. So there's a disruption around the Royal Mail strikes. For the first time ever, we've got the World Cup, FIFA World Cup. Normally it doesn't happen at this time of the year, but when we've seen it happen in the summer in previous years, we see online sales dip. So let's see whether that's also going to throw a spanner in the works once England start, kicking off and everything. So that's a question mark there. But I think the biggest challenge this year has got to be in terms of the cost of getting deliveries to and from customers. If we put this into some kind of context, the average fuel charge this year so far on road transport has been 39%. So on top of the delivery cost, you then pay the surcharge. That's your cost of delivery, compared to last year when it was 19%. So this is a huge challenge in terms of how do you manage that cost? It impacts the bottom line. Now, what we've seen is that some of the big brand retailers like Zara, Next have made announcements around beginning to charge, changing their policies around free delivery, around free returns. So, that's their way of being able to manage the cost. And hopefully other retailers will follow suit, because we certainly see that as one of the biggest challenges this year.
I'll just chuck in, there's a train strike on the 17th of December, which is Super Saturday. So that's when everyone goes to the high street.
You're full of good news, Andy.
I like my dates. All right, so what about
I was going to chuck in, Andy, on the Bobby's raised again about the football on Friday. It wasn't our data, but global data published something, and Times picked up on it on was it Sunday or Monday, and their estimate was about a 200 million reduction, and they were saying normally about 3.2 billion they were forecasting for Black Friday, and they were saying that could drop down to about 3 billion in spend by virtue of the football being on. But again, I don't know about everybody else. When I'm doing almost anything, I've probably got my iPhone or my iPad on my lap. So unless you're a particularly diehard fan where you just could not look away, I suspect people will double screen like they do normally.
Yeah. I think that's true, Matt. But I think, don't forget, we've got the data points from previous years. So who knows? Hopefully you're right. But if we compare what the impact has been in previous times that we've had the World Cup, I think it's, that it does impact sales.
Yeah, you're right.
All right. Well, could I just get from you just like a bit of advice that you give to retailers? Very difficult peak period and everything. Matt, do you want to kick us off, and then Bobby, you chime in?
You go first, Matt.
Well, I'll set you up, Bobby, and then you can give us the good stuff. I think probably just enjoy a drink of your choice this peak period and get through it, because there's probably not a lot you can change from our perspective. I would say, if you'll allow me just to future gaze slightly out of the period into next year, I think there's a couple of things that retailers can continue to do. A lot of that would come from our world around data, right? So your customer data, just make sure as you come into the next year's cycle that you're doing the best you can to ensure that data is fresh, and you've got those consents and you've got all of the accuracy in your data, so you can actually reach your customers through whatever contact media they would prefer. So just get the year off to a good start by making sure that data is accurate and usable, and just continue to look at your checkout and your platform so that you're doing things that are more likely to encourage someone to not abandon what they're doing, but to check out and to enjoy the benefit of what they're going to buy from you. So I think there's some basics just to reiterate as we come out of this period. But for now, I think it's batten down the hatches and get through it, enjoy the holidays, and look forward to 2023.
Yeah, well, thanks. That's a good setup. I wouldn't turn to alcohol. I'm more of a chocolate person myself, so I will eat my emotions and eat a whole box of chocolates. But no, I think advice is that the current economic climate is not going to change anytime soon. The volatility we've seen in e-commerce and the supply chain is not going to go away anytime soon. So really the advice is you need contingency. So have contingency in your operations. As we've seen with Royal Mail, you can't just have one carrier. You need to spread the risk, have multiple carriers, and follow on the heels of Zara and Next. Take the opportunity now to rethink your policies around free delivery, free returns, because that cost is not going to go away either, whether it's to your bottom line or to the planet. So take the advantage now and rethink those policies.
All right. Thanks very much for your input. Back to Future Andy.